Good day, everyone, and welcome to Pathways to 17 Summit. My name is Sephutile Mhlongo. I'm currently the Manager of Financial Regulation and Supervision with Digital Frontiers, and I will be the moderator for this session. This session is being live interpreted into French. If you wish to listen in French, click language button at the bottom of your stop card. Today's session is the role of capital markets in green financing. I am joined by Vimal Parmar. Thank you for joining us, Vimal, and I will now hand over to you to introduce yourself as well as take us through your presentation.
Thank you very much, Sephutile. So my name is Vimal Parmar. I'm a senior specialist of capital markets at FSDA Africa, covering more than 30 to 35 countries across different African markets, mainly on capital markets, policy work, and green finance. So today I will be talking about how capital markets can play a role in green economies and green finance for different African countries. I've segmented my presentation into two. So initially I'll just discuss about FSD Africa and what we have done when it comes to green finance, and then I will move on to the second part, which is on the green finance itself. So I'll briefly talk about FSD Africa. We are a developmental agency, and we mainly provide tools and resources to drive large-scale change in financial markets. We address financial market players to bring growth and opportunity. And for Africa's future, we are looking to help create a sustainable future for the people and the natural environment in Africa. Our main priority countries right now are Kenya, Ghana, Nigeria, Morocco, and Ethiopia. But we work across the SADC region, which is consisting of 16 African countries, the West African region, and the North African region as well. Covering more than 30 to 35 countries on different programs. So I'll speak about the capital markets development approach, what we are doing. We are trying to increase the availability of long-term finance, mainly for economic development and to achieve a sustainable future for Africa people. So how do we do that? Is that one is we support the development of enabling policies and regulations. And again, these policies are evidence-based. We also support development of market infrastructure. We are working on developing a couple of stock exchanges as well as scoreboards and databases across the African continent. And to provide the proof of concept, we are also supporting new product development through demonstration transactions, which is raising capital or the catalytic capital in each of these markets. And finally, we also provide thought leadership and capacity building to market stakeholders. This is through various webinars, presentations, workshops as well, and also carrying out targeted audience trainings depending on the role that they will play in an ecosystem. We mainly use three instruments to do that, which is grants, returnable grants, and investment capital. These are on the financial instruments, and the non-financial ones is mainly to research, technical assistance, and thought leadership. Next, please. So I'll now take you the few transactions we have supported in Africa. So in Nigeria, we have supported more than 4 green bond issuances, raising a total of 162 million. In Kenya, we have done 2, raising about 109 million. In Rwanda, it was a small issuance, about $3.5 million. The recent one was Morocco, which was on the gender bond side. This is a social instrument, which was 21 million. The same with Tanzania, which was 31. ONCF green bond, this was a Morocco mobility bond, which was about $90 million. And in Mauritius, which is in the financial services space, and we raised about 11 million for that. Next, please. So what are our key achievements? As I mentioned, we do a lot of work in terms of regulations as well. So we have supported more than 13 regulations in African markets, 2 master plans, 6 policies, 6 guidelines, and 2 strategies. We are still working on a couple of other strategies and as well as legislation. And why we are driving towards this is to create innovation, because Africa has the right natural assets to have this kind of innovation. Most of the catalytic transactions we have supported have been on the sustainability instruments. So on green bonds, we were the first one to support the Nigerian sovereign green bond. Again, it was the first sukuk in Africa and the first green bonds in Kenya and Nigeria. On the social bond side, which is the gender bonds, we supported the first in Morocco and Tanzania. And a REIT, which is a real estate investment trust, which was again first in Africa. This was issued in Kenya. Next, please. I'll go through this quickly. So these are our 5 main areas of support, which is on product development. Some of the initiatives of programs we are already supporting, is like the Kenya Enhanced Credit Enhancement Facility, the different gender bonds, and on debt and equity side, capacity building, as I mentioned, market infrastructure, the regulatory support program. This covers across Africa. And again, here we are also looking at pensions regulator support, where we are developing guidelines and regulations for the different pension sectors in Africa, and also providing research and knowledge base for those regulators, because the pension regulators are at a different level of development for different countries. So we are providing that support so that all the African countries can benefit. And finally, it's on the data and knowledge, which is mainly on the research side. We are working on some initiatives which are looking at fiscal consequences after COVID. As we all know that the global markets, including Africa, we are in a very different scenario after COVID, with rising debt levels and interest rates also on the rise. Next slide, please. So now I'll go through the role of capital markets in green finance and how we can leverage on domestic capital. As you might already know, that there's over more than $1 trillion assets under management in Africa. Most of these assets are invested in government securities. About 60 to 70% is in government securities, while the remaining goes into other assets, and very little is being allocated to alternative assets. And that is because the guidelines or the policies do not allow for such kind of asset allocation, and that is why we are working to create those regulations and guidelines to allow such instruments to be allowed in terms of investments by pensioners as well as other investors. Climate and nature-related financial disclosures is one of the things which we are looking to support, and we are already working on initiatives on that. Demonstration transactions, as I mentioned, the different green bonds, the gender bonds, the climate bonds, and all this is done so that we can also increase the investment capital into African countries, especially on the green and climate finance. And we do this through the capital markets, because this provides the channel through which you can guarantee such instruments or provide an opportunity for a blended finance kind of a structure. Also, the pensions industry can benefit from development of investment vehicles, again through capital markets, but again targeting new asset classes like the green bonds or green funds, green ETFs, or climate and sustainable bonds, as well as gender bonds. And obviously this comes with a lot of training and capacity building, including research and advocacy. But all this, we are looking to address the short-term needs, which is to catalyze this and create the right ecosystem and the fundamentals. And this is very important to attract green capital into the market. Next slide, please. So briefly, I'll just talk about the green finance trend. So far, Africa only attracts about 3% of global climate finance. And, there is huge potential here because Africa has natural assets which maybe other continents might be lacking. So we have the opportunity and we have also the benefit of crowding in private and public finance, both from international and domestic investors. As you all know, that the global financial industry is undergoing transformation to decarbonize, mainly reducing assets that carry climate or environmental risks. And this presents about a $3 trillion investment opportunity in Africa in the next about 10 years, with expectation that 75% of this finance will come from private investors. So where is all this investment related to climate or green finance flows? We have seen the public climate finance, they have 253 billion in commitments into climate and green finance. All this is going to be done through capital markets. There are no other channels at the moment to make this happen. The Green Climate Fund, again, is another one with a 6.7 billion of portfolio. The GCF, which has around 2.3 billion, and also different multilateral development banks has about more than 60 billion in commitments. But this is just not it. We have other institutions like the Net Zero Asset Owner with 1.4 trillion and already 53 investors in it, which is a very big confidence in the global economy and in Africa that people are looking for such kind of investments, and the supply of capital is available. It's just the demand side which needs to be built, and Africa can benefit from this capital if you have the right instruments coming through capital markets for green financing or climate financing. We also have the Green Bond Market Fund, which is currently at about 1.5 trillion, more than that. And the Glasgow Financial Alliance for Net Zero, the GFunds Alliance, again, having 450 banks and insurances joined it with more than 130 trillion dollars in available funding. So as you can see, climate finance or green finance or sustainable finance, if you may call it overall, there's a lot of appetite for such kind of investments in Africa also. And even if 1% of this capital can come to Africa, that's going to create a significant difference in the African markets in terms of creating jobs and eventually also helping to reduce poverty levels. Next slide. So what are some of these instruments that can come through the capital markets, especially targeted at climate or green finance? So as I mentioned before, on the debt side, we have the different bonds, the sustainability bonds, green bonds, and the funds. But also on the equity side, we have certain markets which can develop indices to track or benchmark, which is very important when it comes to pricing. The real estate investment trust is also another instrument which can be classified as green or sustainable. And also there are funds which are can be labeled as green funds. Again, there's a lot of appetite on this. There's also opportunities in terms of outcome-based financing. So payment for environmental services, which is the PES, where market stakeholders are paid based on the impact it is achieved. So it is quite targeted and it is intentional. We also have development impact bonds. This can be, example of zebra bonds or the rhino bonds. But also we have the social impact bonds, which is not included here. That is mainly for the health sector. And, as we've seen after COVID, a lot can be done in terms of raising the climate capital coming into Africa. Then we also have the carbon markets, which is now developing. Next slide. So basically, in summary, to understand what a green bond is, it's just like a normal conventional bond, but it has green credentials where the use of proceeds are mainly for environmental benefits. And this has a high level of governance and transparency for investors so that the proceeds or the capital raised are not misused. So why is this beneficial to investors? You know, of course, on top of providing financial returns, it has environmental benefits. It is also good for risk management and investment policy statements or investment profiles of pension funds who are looking at ESG requirements. And it helps in increasing your reputation as an investor investing in such kind of instruments. There's good profile raising. And obviously, there is good and improved transparency because there's a deeper engagement not only with the company, but also through other market stakeholders to know the use of money and where we are in terms of impact. Next slide, please. And to the issuers, now these are the people who provide the supply side of such instruments for investors to invest. There's a lower cost of capital potentially because there's a high appetite, which means that the yields can be much tighter. There's more investor engagement and stickiness, you know, because of the limited supply on such kind of instruments. Investors tend to hold on to such green instruments or climate instruments, and they don't want to sell or let it go from their portfolios. Of course, it includes improving the risk and diversification, but also it has reputational benefits. You know, any issuer who comes to market with such an instrument gets a very good profile raising, not only in Africa, but globally as well. I'll briefly go through the green bonds issuance process. As I mentioned, use of proceeds can be in any sector, which has certain standards need to be followed. But then the project is also evaluated and selected. You cannot just put any instrument for the green bond issuance. Then the proceeds are supposed to be managed. As I mentioned, you know, there is high governance and transparency. So there is a clear reporting in terms of, you know, how the allocation has done, how the funds have been used, and where we are in terms of the impact that was initially envisaged to achieve through the green issuances in the market. An external review is also important because a third-party verification gives much confidence to investors, which provides guarantee that we know whatever is being invested in terms of the green assets are actually green and not just any other assets are being included in the issuance process. This is then certified and a rating is also given for the benefit of the investors in the market. Next, please. Yeah, so this one I have spoken before where FSD Africa is playing. I'll skip this slide maybe to the next one. Next one as well. Yeah, so on the policy side, so we are supporting both the public and the private sector, but also we are developing a peer learning mechanism through the Africa Green Finance Coalition, where each African country can not only benchmark, but also learn from its peers who have successfully done such instruments in the market. Next, please. So this map basically shows where we are in terms of the support we have provided on green and climate transactions. As you can see, it's across Africa, mainly on the bigger markets, but also smaller markets like Malawi, Rwanda, and Ghana are part of our support. As I mentioned initially, we are covering in the SADC region, more than 16 countries. There's a grid mode program already existing. We have provided transaction support in Mauritius. We have done a demand study, and as well as we're doing capacity building and training for different countries. So yeah, this is the last thing. What are the key learnings and insight is that, you know, this is a very niche asset class, and there's still a lot of support and technical assistance which are required to achieve the milestones. Also, it depends on the national priorities. If the national government is driving the green or climate agenda, it becomes much easier to attract investment capital from climate and green funds. As I said, so mainstreaming climate issues is very critical in the national level, and engagement and advocacy to create the awareness and sensitize the market is quite key. There is limited data available at the moment. However, we have done already a research which is providing good data, and governments can also provide incentives to attract such kind of investments. So for example, in Kenya, the government has tax exempted any green or sustainable instruments which come to market, so investors do not have to pay taxes on the returns on such instruments, which is again very attractive. So thank you very much. Sorry, it was quite quick because of the time, but I'll be happy to have any questions from the audience.
Thank you, Vimal, for that presentation, for that insightful presentation. Perhaps while we wait for questions from the audience, I have a question myself, which that came as you were presenting, which is, with all of the conversation around green financing, green bonds, sustainable financing, is there a risk, and this is me drawing from my policy background, is there a risk of crowding out other national priorities in favor of green bonds because it's the hot new thing, you know? Are you seeing that in your work? Is that something that is being discussed at the moment?
Yes, so that is something which have come up recently because after COVID, many things have changed. So some of the markets which were already driving the climate or the green agenda have kind of given it a secondary priority. And, you know, the green agenda is not moving forward. However, in terms of the policy and guidelines, these countries are already working to develop the regulations and the policies. Because as you might be aware, there are different standards. There is the EU standard, there is the Climate Bonds Initiative standard, there is the ICMA standard, but African countries want their own standards. So we have supported a couple of African countries to develop local domestic guidelines for such kind of instruments to be issued in the SADC region, in Kenya, Nigeria, Ghana, and other markets. So this is quite encouraging, but yes, there is some risk that some of these new products are being given a secondary kind of priority because of the new much pressing issues that the countries are facing at the moment.
Yeah, okay. You also briefly mentioned, as you speak on standards, I'd like us to have the discussion around that and around data and reporting. You know, although you briefly mentioned it in your presentation, but the EU has taken, being one of the areas that are leading in terms of developing standards, right? So they've taken the route of developing sustainable finance disclosure regulation, which seeks to ensure that financial firms within the region are comprehensively disclosing just how committed they are to sustainability. Do you see Africa moving in a similar direction? Adopting a similar policy, and why? If not, why would it not work for Africa?
Yes, Africa is moving in that direction already, although maybe the momentum will be a bit slower than we will have really wanted or expected. As you mentioned correctly, you know, because of the few changing priorities. But we have the standards and policies. There are a few things which, in terms of the policies and standards, that can be adopted from the international standards or guidelines. However, as you know, Africa is a completely different continent, and then a customization is also needed because based on the ground ecosystem, based on the ground assets that are present and that can be utilized, such policies are being supported in terms of development to create the right environment for the African country. Not all African countries are the same level of development. So when it comes to green and climate finance, Kenya, Nigeria, South Africa, Morocco, those countries have really, taken ahead. But the other countries are also picking that because there's a lot of investment capital available, and some projects which are not able to attract conventional financing can actually attract, the green and the climate financing, because that capital is available and the assets are also available, as Africa is blessed with natural assets. So there's a lot of opportunity and the potential also, once the ecosystem, the standards and the regulations have been owned by the African countries that we are looking in terms of attracting investment capital.
Thank you. We have a question from the audience. Abigail is saying thank you. She's found the presentation to be very insightful. Could you just briefly, within 2 minutes, are you able to give us a little more information about what gender bonds are and why you have supported them in various countries?
Okay, thank you. So gender bonds, it's a social bond asset class. They mainly focus on the use of proceeds where, this capital is available and provided to either male or female or men or women. So far, the ones we have supported are mainly for women. So one in Morocco and one in Tanzania. And why we supported them in those countries is because those countries had the ready pipeline to provide the capital, and it is put into use. There are also guidelines on gender instruments. There's a framework which needs to be put in place. So in Tanzania, we supported the NMB Bank, which is one of the big banks there, and also in Morocco we supported. And these funds are actually being used to onward lend to the women population who have businesses or SMEs, and is actually creating a difference. So such kind of instruments is quite targeted and niche. That capital cannot be used for anything else, but only for what it was initially allocated for, in terms of gender work and specific sectors. It can be sector agnostic or it can be sector specific. So it depends on how the structure is done and how the framework is done. And they have really done so well. They were all oversubscribed, but obviously this was not taken up completely because the pipeline was the one which was limited.
Thank you, Vimal. We've come to the end of our session. I know we still have a lot of more questions, but perhaps maybe you can join us in one of our networking sessions and you can engage more with us there. Thank you for joining us and participating in this session, and we hope to see you in subsequent sessions. Goodbye.
Thank you very much, Sephutile, and thank you very much for this opportunity, and I look forward to interacting in the future. Thank you.